So let's start off with a dollar. What happened yesterday? All right. So we're obviously creeping up. All right, creeping up to this 98,500 as expected. All right, we obviously had hotter than expected CPI data yesterday, and I think yesterday is a really, really sort of important time as to why you need to understand, macros on probably a little bit of an above basic level. All right, because it made yesterday afternoon quite easy, in regards to what was happening, and why. Obviously, inflation. All right. If inflation in any economy is high, and this might be a tail wind of obviously what is going to happen across all currencies. So inflation in the US is still high. All right. In a very, very, simple way of looking at it. All right. What does that mean for the, US dollar, for Jerome Powell, Federal Reserve, whoever's in charge of, the kind of monetary policy of that economy. All right. What that means is they're under a bit of pressure. So it means they're not going to reduce interest rates. All right. Now, not reducing interest rates. Obviously, the higher an interest rate, if you're a bank and you've got a higher interest rate, like these guys who, lend money to potentially people who are bankrupt, right? Their interest rate's going to be higher, so they're going to make a lot more money from lending money out. That's a very, very basic way of looking at it. And obviously, a country, if your interest rate stays higher, it doesn't have to tick up much because we're not talking about £100, £1,000, 10K. We're talking about millions, potentially billions here. So 1 or 2% is really, really important, and it's a lot of money. So obviously, naturally, if inflation is higher, right, that's going to put pressure on them. They're going to keep interest rates higher for longer, as opposed to cutting. So there's a big, cycle. Once they reduce interest rates, it encourages spending. Us as humans, think of us as like ants, or lab rats or children. If they give us too much, we all start spending, and then they've got to curb it back. So that's basically how it works. So obviously, inflation come out hotter yesterday. What then also comes out hotter? Yields. This move here happened. All right, so yields back above that 4.46%, which is currently testing this area right now. We're currently kind of in this region here, but obviously definitely trending to the upside. Now, how can you utilize yields if you don't have the US 10Y chart up, or they are government bonds? All right, so think of this as judging the big money coming into the dollar. All right. So if yields are pumping, that's going to tend to drag the dollar up. They tend to work in tandem. Yes, obviously we had a strange situation which made middle of last week quite hard, where yields weren't performing as the dollar was. But obviously, naturally everything catches up, and obviously this push here has then pushed the dollar up here. So I am anticipating there is a higher probability that 98 500 is going to get tapped as opposed to 98. All right, that's the higher probability here. So that's why we've bought the dollar. All right, I'm not saying that there's enough here to break through right now, but there's enough of a tailwind to take this up to, and obviously test this 98 500 area. But basically testing these highs here. All right, basically testing these highs here. So what have we got coming out today? We got some GDP for euro. We did have euro USD, set up. But obviously, I've cancelled all orders, because I'm happy. I've reached my target, and this is maybe someone will go over afterwards anyway. But we do have PPI data coming out, expected to come in as expected. So previous forecast. So, expected to come in. I'm expecting this to be potentially slightly hotter after yesterday. So obviously this might as well be another little tailwind to push. Will it be that tailwind to push dollar above 98,500 so that this becomes the floor as opposed to the, ceiling? And obviously, will we see us creeping back to these 99 levels? Let's wait and see. So that's obviously what we're kind of looking at here. Apart from that, not a lot else. I'm going to be monitoring Euro GDP, but obviously, yeah, that's expected to come in slightly under. So obviously this will mean Euro USD, and we'll speak about this now. I was hoping for a nice push up. However, we didn't get that. If you look at 6:30 when we placed the trade, or when we documented the trade, we were very, very close. Just needed this to pop up a little bit more, but obviously we had this tailwind here. So that's obviously what we were looking at. I didn't want to take it any tighter because we've obviously had a lot of indecision here, in regards to obviously what is, happening and why, so that's why I graded it slightly less, but obviously it's had a beautiful rejection from there. Going into the other position we obviously had GBP USD, I've actually closed out here. When I documented the trade, we were here, so obviously I didn't enter this one here, so I just tapped entry. So it is honestly was a great trade. There was part of me was going to move stops to break even, but then I thought, you know what? Yeah, markets recently have been a bit choppy where we've almost had this nice move during London, and then we've come straight back up and ended New York in about the same area. So I'd rather, take the money off the table, be able to capitalize on it, and then obviously we can build from here. Other one was gold here. All right, little bit choppy, but obviously really, really happy. Had two entries on gold here. One, two, came out of gold around here. So, yes, could have taken it further, but actually, arguably, we've still got about 145 pips out of gold. So pretty happy. Yeah, not a lot more to mention on that one. USDJPY was on the cards. However, as much as this was brilliant for us yesterday, I think our entries were like here yesterday. It was perfect. Blasted up. I don't like this, and this is one thing that I'm mentioning. Just be a bit wary buying USD JPY because look where all the big candles are, and they come from nowhere, but they're all to the downside. There's no massive candles pumping to the upside. So if you're buying USD JPY, which we have to do at the moment, we have to go with the dollar. Just be a bit wary, tread a bit carefully because this can happen. All right, and what you don't want to do is have your stop loss here and then entries here, price comes down, but it wicks out and then it moves up, So that's where placement on USD JPY is key. And also Aussie, not really doing very much, at the moment. Kind of in a bit of a flag pattern here. Kind of in a bit of a flag pattern. So what should tend to happen is it gets squeezed, like a ball, if you throw it into, oh, if you throw it into, a corner, it will start to go and it get quicker, 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 and then obviously it will break off. So expecting quite a big move on Aussie because price is what we call getting squeezed. If we're looking at it from a technical term, that is 100% getting squeezed. So I'm just kind of looking at it, in a respect of, yeah, we're expecting, something to happen here, but it'll be quite a big move either way. But we don't have much Aussie news this week, so it might just continue to do what it's doing, and then potentially, next week might increase. Um, that's about all from me this morning. Pretty happy. I'll go over the cop here a bit. We're obviously down. I think we're down about 3.1% this week. And this is obviously one thing that, I wanted to go over about different markets for obviously different strategies. We've had weeks where it's been tough. It's been tough. I mean, if we go back here to I think obviously, the last week of April was tough. I think we had a week in this week here in March was tough. You've got to stick with your plan, all right? And obviously, don't change it straight away, because there's going to every single strategy, it doesn't matter which one it is going to have, certain markets where it's a bit harder. All right. And obviously, I'm actually very impressed. The guys are obviously running it well. They're only 3.2% down because it's basically spiking out. The stops are very, very small. And obviously, rather than, over risking, everything's kind of taken over properly. So I think this week is prime where, we obviously had a big losing day Monday, big losing day Tuesday. Wednesday, I'd call that probably around a break even, probably a little bit worried about risk, and then it starts to build. And then we had this brilliant week here, So, but if we'd have started to change our, strategy because we'd have had a few days where it's, markets aren't quite agreeing, chances are this week wouldn't have looked like this, So the fact is, whatever strategy you choose over time will always be profitable if you stick to it. Yeah. All right. So that's the most important thing. And obviously, not too worried, still 11.2% up, off of a 10K account, made obviously just over 1K, so happy here, so can't grumble too much. So yeah, we've just got to write it out. The most important thing that I like is that the guys are obviously keeping stops nice and small, so yeah, it is what it is. Right, let's have a look through some of these questions. So we've got Alex woke up slightly late. Kevin over 20% up this morning. Joe, you made some good positions yesterday. Maybe you should seek out more road closures to see. And you know what? I had 3 hours there. I mean, normally I'll be, sat there for 3 hours, but when you've got nothing to eat, nothing to drink, yeah, it works. Do you think yields could rise further? They are very high in comparison to the beginning of the war. Yes, I do think yields can, think about what's happening. It's not, yields, yeah, they can and probably will go higher. Obviously pre-war inflation wasn't a worry. Banks or banking systems are obviously starting to cut interest rates. Obviously, so when interest rates get cut, that's obviously what's going to drop your yields because obviously if you were getting 4.5% last week, you're only getting 4% this week. It's going to drop. So, naturally, interest rates higher will pump yields. Interest rates coming lower, obviously, it's going to affect any currency. Because if you invest any money there, even if it drops, say, 0.25%, you're getting 0.25% less money. So that's going to drag money out of the, markets. Hey Dan, what is the website that you use for news? Yeah, I use it in investing.com, but there's also Forex Factory. You got FX Street, but I've always liked investing.com. I've got access as well to a Bloomberg terminal. So I use that for obviously, news, but obviously that's quite expensive, so I wouldn't really recommend it. And less well tell obviously you properly get everything. Alex, I'm afraid of yen at the moment. It moves like a meme coin. Will keep my hands off this. Yeah, it's one of those, like yesterday morning was brilliant. It was brilliant. We had a really, really, really good trade yesterday morning, and actually the meme coin esque of it, really, really helped us because I think our stop. I think we had something a little bit like this. Our stop was about here. I think our entry was about here. But obviously we then had our three entries. So we had another one here, another one here, so any further and yeah. But obviously you then allow for a pretty big gap. I mean, it was about a 60 pip stop. Luckily it was. I don't think it was that actually. I think it might have even been a bit lower. But that was about our, setup yesterday. But when you have the three triggering, it goes straight up. It's brilliant. Um, Hey Dan, would it be viable to place a buy limit on USDJPY at one of the outer extremes of the recent spikes? It seems to be a trend, or is this too risky? So what? I mean, my kind of how I would mark up USDJPY right now. I'll be interested from here, from these highs, about where it is right now, you know. And then you've got to be looking at three positions here. You've got to probably this would be quite a big area, right? You know, because we've got obviously these lows here. All right. You then got to be looking, there's a reason why prices, stopped here. So I'd probably have another one here. So this is how I would split up USDJPY. I wouldn't really want to be trading anywhere in between these areas, unless it's the, right time. Tends to move quite a lot on London Open. There's a strategy in my course called Tokyo Drift, and it basically comes back, you can even see here. All right. So if we're looking at, where was it here? So if we're looking at this from like a daily, the daily closes, for example, yesterday morning was here, and if we go down like a 15-minute time frame, right? So what ends up happening strangely is you will, sometimes have Asian Open will t tap, or even the Asian, low, because obviously Asia low was here, yeah. So Asia low was here, and obviously that's the kind of area that could potentially tap. It doesn't happen all the time, but lots of times it will come back down to test Asian low and then obviously rebound off it, and that's what's happened. But it's definitely like grabbed, yeah, it stops liquidity. It's grabbed for anyone who had a stop loss here, stop loss here, even stop loss here. It's grabbed all of this, all of it here. Before it's had enough momentum to push to the upside here. So just yeah, that's quite a good thing to know about. Obviously, yen is normally London Open. If it's going to have a big move, then obviously that's one that you can look out for. So right. Does anyone have any more questions? Any more for any more? Otherwise, we'll end it here. And yeah, we're great start. I mean, both days we've been done before +8, which is crazy. So crazy. So yeah, right. I hope everyone has a brilliant day. Send me your profit shots in, and yeah, well done. Let's smash it. Bring on this afternoon. Bring on this afternoon. Have a good one, guys.